responsibility to manage that budget and how you would do that. And then having a look at how we can use spreadsheets in order to make that easier for you. So we want to have a look at understanding the principles of setting budgets, understanding your role as a budget holder, or if you're not already one, what you may do if you became a budget holder. Know how to effectively manage a budget, and we want to do some demystifying of finance, so some jargon busting. Finance staff can always kind of talk in what some of my clinicians say is another language, so I'm hoping that I'll be able to kind of make that more understandable for you. I apologise that you're looking at the side of my head, but I have my presentation on one screen and you on another, so sorry about that. But yeah, are there any questions before we start, or anything that anybody would like to be covered? If you just kind of want to put any questions in the chat, and I'll try and answer them as I go. Grace, if I happen to be missing any, will you just give me a shout or a poke, and I'll have a nosy?
Yes, no problem.
Thank you. Okie doke. So I thought at first we'd play a little game, and that we would do some jargon busting. So if you could kind of put your ideas in the chat, let's see if we can kind of find out what these words mean and what we use in finance. So the first one is accrual, and we've got 4 options. So we've got an amount that you put aside in your accounts to cover a future liability, costs or income recorded in the accounts but has not yet been invoiced in the period they relate to, amounts paid for in advance of the goods or services being received at the period or year end, and then financial debt or obligations that arise during the course of business operations. So if you just want to pop in the chat which one you think it is. Okay, we've got a mix, some B's, some A's. Oh, we've got a C, more B's and A's. Okie doke. So the correct answer is B. So it's costs or income recorded in the accounts but has not yet been invoiced in the period they relate to. So, for example, you have an electricity bill and it's invoiced every 3 months, so you billed on a quarterly basis. But obviously in our accounts we need to use that, we need to put an entry in for each month. So basically what we would do in month 1 is we would accrue for £100, because we say that if it's £300 for a quarter, then it's about £100 a month. So we would accrue for £100 in month 1, £200 in month 2, and then we would let the invoice come in month 3, which will be the £300. So that's how we basically account for the cost of something before it's been charged. And again with income, so say for example we were the company billing the electricity, we're only billing it in March, but we need to account for the income in January and February, so we would do it the same way. So that is accrual. So the next one is prepayment, and the options are the same, so we can do a bit of process of elimination, but let me know what you think this one is. Okay, lots of C's coming through. Yeah, that's correct. So amounts paid for in advance of the goods or services being received at the period or year end. So for example, we're paying a 12-month insurance contract and we pay it in advance. So we need to split the contract amount out over 12 months. So one of the most common ones is like maintenance contracts for your medical equipment. So we tend to pay them in January, and that covers like January to December, or pay them in April for April to March. But obviously we need to make sure we account for that across the financial year and split it out. But we've prepaid it in effect because we've not had, say we pay it in April, we've not had May service yet. So we're paying in advance. The next one is provision. So we've got an amount that you put aside in your accounts to cover a future liability, money held in the balance sheet which can be carried over financial years and made available when required with or without restrictions on use, a resource with a value that a company owns or controls with the expectation that it will provide future benefits, and then money that is set aside to buy or improve the buildings, equipment that it uses to produce products or provide services. So do we think? Okay, we've got A, C, more A's, more C's. Okay, so the one for this one is A. It's an amount that you put aside in your accounts to cover a future liability. So a really good one is bad debt. So for example, if as an organisation you think somebody owes you money and you're unlikely to get it, you would provide for it. So you might hear that term, will provide for it. And basically what it means is that you kind of put a liability in your accounts to say, we actually think we might need this much money to cover bad debt that we're not gonna get paid for, or taxes, for example. So you have a tax liability, a tax provision to pay the tax. So it's basically just an account of an amount of money, and it sits on what's called the balance sheet, and we use it to pay for anything that may occur in the future as a liability. Next one is reserves. So we've got money held in the balance sheet can be carried over financial years and made available when required with or without restrictions on use. The reduction in the value of an asset over time, due in particular to wear and tear. It's an expense, but there's no cash related payment. A resource with value that a company owns or controls with the expectation it will provide future benefits, and money that's set aside to buy or improve the buildings or an equipment. So let me know what you think on reserves. Lots of A's. Yep, spot on. So it's money held in the balance sheet and can be carried over financial years to make available. So reserves can be used for lots of things. Obviously, depending on your financial position, some organisations don't have it, but it's basically like a surplus pot of money, basically, that you know you're going to need to spend, but you don't know necessarily what you might need to spend it on. So you can use it for things like purchasing fixed assets, funding expansions, so business cases, that kind of thing. And usually somebody holds the reserves pot, and there is like an approval process. So you would say, I want to use reserves money for X, Y, and Z, and then you take that for approval for the board. Each organisation kind of manages their reserves differently, but that's normally what it's used for. So the next one is reserve. The next one's journal. So we've got an amount that you put aside in your accounts to cover future liability, the process of moving budget from one place to another, an end-to-end inventory management system, or the process of moving actual costs from one place to another. Now there could possibly be two correct answers depending on what your organisation uses. So I'll accept either of them. Oh, a few different ones. C's, B's, D or B, B, D. Okie doke. So it is B or D. So this will say, when I move the answer on, it will say D. Because within our organisation, moving budget from one place to another is called a virement. So I do know that some other organisations do use that term, but we only use journal for moving costs. However, some people do call them budget journals. So it's right that it can also be moving budget from one place to another. Like I say, this one just says cost because we call budget journals virements, so it's not a journal for us. But an example, obviously, of moving costs from one place to another is that you add like some pens and paper and you coded it to course fees, and in finance we would just journal it to stationery. So we would take £10 out of course fees and we'd put £10 into stationery, and we'd use a journal to do that. Once an invoice is coded and approved, it can't be moved off the code, only by doing a journal. Obviously, with budget journals or virements, does anybody know if their finance departments call them virements? I'm always curious because it's not actually a word according to Microsoft. So I'm curious as to when anyone else uses it. But that's if, for all of a sudden, I don't know, you have a service that moves. So, for example, within our trust, theatres used to sit in diagnostics and we moved them to surgery. So we use a virement or a budget journal to move all the budget into the right division. Right, Joanne, yeah, you use virements as well. Yeah, a few organisations have popped up when I've delivered these sessions that other people use virement as well. But yeah, so that is, B was correct as well if you do budget journals at your organisation. Okie doke. So next we're kind of going to move on to look at setting budgets. And the different budget setting methodologies. So these are the most common types of budget setting methodologies. Each of them have kind of different pros and cons, which we'll go through. These are the ones most used in the NHS. So we've got historical budget setting, incremental budget setting, zero-based, and activity-based or forecast outturn. Has anybody, just pop in the chat, has anybody heard of any of these? Does anybody know if they're what you use? No? Okie doke. Forecast outturn and activity based. Okie doke. So, looking at historical budget setting, it's basically just a rollover of last year's budget. Nothing changes and everything's assumed to be equal. So you are literally using the exact same budget you used in the prior year. So there are pros and cons. It's very simplistic, and it takes no time because you don't need to put any effort into it. You've already got the budget and you're literally just using the same one. So it's most simplistic. It takes very little time, and it works really good in static environments. So industries that have predicted levels of demand, places where you've not got any variables. So for example, you know, for trusts, for example, it depends on how many patients walk through your door. Whereas if it's something that doesn't depend on that kind of thing, using historical budget setting is great. But obviously it does have some negatives. So it doesn't account for levels of variability. So it doesn't account for seasonal change. It doesn't account for if you have any one-off items. And actually, if you did have one-off items in the previous year, so say, for example, you lost a piece of machinery and it had to be written off and you had to purchase a brand new piece of machinery. If you budgeted, say, £20,000 to pay for that new piece of machinery, you actually would be including that in your budget this year. So you'd be overstating because it's unlikely you'll need to purchase that equipment again the next financial year, unless it was something that, you know, was replaced on a rolling yearly basis. So obviously that's a negative because you could actually be overstating your budget when you don't need to. So does anybody have any questions on historical budget setting? I always say as well, if you can't type fast enough, feel free to just come off mute and talk to me. No? Okie doke. So the next one is incremental budget setting, and this is last year's budget plus specific changes. So making changes to things like inflation, if you've made any cost savings, business cases, developments, taking out one-offs, that kind of thing. So it's a structured historical budget setting. So you're basically saying we'll use a rollover budget, but then we're going to change X, Y, and Z, and those things would be the same that you would change. So again, pros and cons. It's very time efficient because the actual budget itself is built. All you need to concentrate on are what are the changes that you're going to make. And it's quite easy to understand and articulate. So quite often it can be difficult to understand why a budget has moved year on year, because especially if like for you as clinicians, it's business as usual, actually there might be other reasons. So it's quite easy for finance to articulate to people why the budget is different. We say it's down to X, Y, and Z, which is X, Y, and Z amount. So it is very good in that sense. However, it relies on last year's budget being accurate. So the base point is still the same. It's only kind of items outside of the budget that you're changing. So again, it will include any budgeted one-off items that happened in the previous year, because that probably won't be something that you would look at. You would just look at like adding on your inflation amount, adding on your cost improvement or SIP or whatever your organisation calls it, and then any changes to service. So actually, it still has a lot of cons because it doesn't always end up being so accurate. So next we have zero-based budget setting. So this is a full bottom-up approach, and it basically looks at what does it cost to deliver your service. So again, we've got pros and cons. It's the most comprehensive, so it is the most robust method of budget setting, because you are literally saying, I need to treat X amount of patients, and to treat those patients, I need certain materials. How much do they cost? How much income do I get? It's so so detailed, all your income and all your expenditures considered, so it's really, really robust. And it also increases the accountability, because this method of budget setting, you need to spend a lot of time with your budget holders if you work in finance, and you rely on them giving you the information that you need. I wouldn't know as a finance member of staff what you need to treat a patient, so it increases that accountability, as it then becomes the budget holder's responsibility to provide us with that accurate information, and actually you tend to find that then they can manage their budget better. It is so timely. It takes so long. We have done this previously in my organisation, and I think we started in October or November to have a budget for April. So pretty much by the time you started your new year, you're already looking at next year. It takes a really long time because you really have to get into the nitty-gritty. And it's dependent on people taking that consideration and inputting that time. If you come to a budget holder who, you know, is it's a tricky period, or they just, you know, kind of don't put the effort in, or it doesn't get to the right people. So if it's at a really high level with people who, you know, don't know what happens in the day to day, it doesn't work, because you don't get the information that you need to make it work. And you've also got a risk of omission. So if you forget something, and if you forget that actually you need a big stent to treat that patient, and that's going to cost £100,000 a year, you're going to be in a bit of trouble. So it's really important doing zero-based, that you get to the right people, and that it's really, really thrashed out and considered. Are there any questions on zero-based or incremental budget setting before I move on to the last one, which is most commonly used? No. So finally, it's activity-based or forecast outturn budget setting. This is the most commonly used in the NHS, and it's what we use mainly at my organisation. So the budget varies dependent on the levels of activity. So obviously, at the minute within the organisations, the income regime is changing. So due to COVID, there have been changes, but we used to work on payment by results. So we treated a patient, we got paid for that patient. And considerations given to the level of activity that's planned to be undertaken, with variable costs and that kind of thing. And we say, what do we forecast to spend? What do we think we're going to spend? And it's kind of like a hybrid, really, of all the other budget setting methods. So we look at one-off income and cost being excluded. Payroll costs are worked out person by person. And there are, again, pros and cons. So it's the most accurate as it's based on planned activity. So it's kind of like zero-based, but you're actually looking at your levels. So you're actually thinking, how many patients am I going to treat, and how many theatre slots am I going to need? How many pieces of this equipment am I going to need, etc. And it's more comprehensive than other methods due to each element being calculated individually. So it's a lot more narrow-minded, which means that each area is very specific. And then the cons are that it's reliant on you achieving that income that you expect to achieve. So if you imagine looking at it like your pay, so you have X, Y, and Z bills that you need to pay, and you rely on your salary. Well, if your salary doesn't come, you can't pay the bills. So if we don't achieve the income that we expect to achieve, then we don't have the income to pay for the expenditure. What you should find, which doesn't always happen, is that if you're treating less patients, you're using less equipment and you're using less resource, in which case you shouldn't have more expenditure. However, the theatre runs regardless of whether a patient's in it or not. You know, it still costs to run that theatre session, so it's reliant on you achieving that income. And also the prior year forecast outturn needs to be accurate. So when we're looking at forecasting the current financial year to budget set for the next financial year, it's really important that that's correct, because you're saying, well, I don't know, it's December and it's month 9 and we've spent £9,000. So I think, well, we average in about £1,000 a month, we'll probably spend 12 grand. However, if actually somebody knows that in February we're going to have to buy 2 new pieces of equipment and it's going to cost another £50,000, we then don't know that. So if we don't put it in the forecast outturn, we wouldn't know we needed to spend it in the next financial year. So it's also important that the one-offs are excluded. So again, it's kind of like that. You have to be in the detail with the people that know, because within finance we sit on the outside, so it's important we have budget holder meetings. And when you have budget holder meetings with your finance teams, that you tell them these things, you know, when you're expecting big costs and that kind of thing. So are there any questions in general on any of these budget setting methods or anything about how organisations set budgets? No? Okie doke. So next up, I want to look at efficiency schemes. So this will be a big part of your role as a budget holder, will be to identify and transact efficiencies within your areas. And it's really important that you know how to identify them. So a SIP scheme, what we call cost improvement program or cost improvement plan, might be called something else at your organisation, is something that results in an actual reduction in spend compared to the previous year's spend. And you also have to take account any reduced income. So you might say, well, we're not providing a service for varicose veins anymore. That's just plucked out of thin air. I know it's a procedure of limited clinical value, but we're saying that if we don't do that anymore, we're actually going to save loads of money because we don't need to buy any of the equipment. But actually, at a time where that treatment was paid for, we wouldn't get paid for it anymore. So we might be losing the expenditure, but we're also losing the income. So we have to, a SIP scheme or a cost improvement has to be net of the income that you're going to lose. So, for example, there's a small one here. A drug price in 2019 was £10 and we used 100 of them. So it cost £1,000, but in 2020 the price is £7 and it's going to cost us £700. So there's a saving there of £300. That's a direct cost improvement. The price of the drug has gone down, so we're paying less for it. So it's something that, or you can look at the other side, so something that results in an actual increase to income compared to the previous year, taking account of any increased costs. So you might say, well, actually, we didn't used to do varicose veins and we're going to do them now and we're going to get the income for them. But actually, it's also going to cost us, I don't know, £1,000 a patient, plucking numbers out of the air, to treat that patient, but we're going to get £1,500. So that increase of 500 would be a cost improvement because you're making an efficiency, you're doing a new service and it's going to cost you less to deliver it than you're going to get for it. So again, the example here is you're in a clinic and you're receiving a single professional tariff when it's actually multi-professional, so there's more than one medic in the room. It's always been this way, so we've always treated it with multi-professional, but it's been coded incorrectly. So our costs don't change because the same people are attending the session, but our income will increase. Oh, we got some hands up.
She didn't want a great big bird.
Yeah, we've got Rachel's hands up.
Sorry, can I just ask, so I have a CIP on my budget, but in my experience of managing my CIP, I use the staff turnover line to pay my CIP. Is that quite normal? Because I work in education, so we can't really make efficiencies in terms of consumables and equipment like that. So I tend to just use the vacancies and any vacancy I have to pay off my CIP target.
Yeah, so a lot of people do that, but the thing is, it's non-recurrent, isn't it? So say, for example, obviously, you'll know that if you get rid of it for the, say, the last 4 months of the year, the post was vacant. The only thing is that you're not making a recurrent saving, but it is very common that people use vacancies. Obviously, it just has to be a reduction in spend on the previous financial year. So actually, if your post was vacant all the year before, you're not making a reduction on the year before spend. So that's not a cost improvement. But yeah, it's not uncommon that people would use vacancies. Obviously, mainly we just look for ones that are recurrent so that it's a continuous saving. But I appreciate in your sector, it's not as easy to do that.
Yeah, I mean, I think sometimes when we run, because we do a lot of income generating courses as well. So sometimes if we generate more income, we would then just give the income for our cost, to put that towards our cost improvement as well, rather than, because it's pretty impossible to make efficiency savings with courses.
Yeah, no, that's exactly it. So you're generating more income, but it's not cost you anymore to put on those courses. Again, like I suppose if they're overbooked or whatever, and you can take more people, then yeah, that's definitely a good example. Because you're generating more income and it's not costing you any more money to do that. So yeah, 100%.
Oh, super, thank you so much.
No worries. Any other questions on efficiencies? No? Okay, so this is what we don't say are efficiencies. So surplus budget where actual spend remains the same as the level as the previous year. So say for at the end of the last financial year, you had £20,000 of your budget left. And this year, again, you've spent the exact same amount of money and you've got £20,000 of your budget left. Surplus budget is not a SIP, is not a cost improvement. It's not a SIP. Your spend is exactly the same. So you've not saved any money. You just have surplus budget to requirement. And for whatever reason, that might be something you're expecting to spend hasn't gone through or something changed. So we don't class surplus budget. Negotiation of a reduced cost for something that wasn't paid for in the previous year. So that's just cost avoidance. It's not cost saving. You're just avoiding paying more than you would have done, but you've not saved based on the previous year. Something that reduces your cost but moves it to another business unit. So if you work in dermatology and you get charged for something that actually belongs to plastics, you're not reflecting it in the overall bottom line of the organisation. You're just moving it from one place to another. So that's not a cost improvement. That the organisation overall isn't saving. And then you've got managing a forecast run rate increase by implementing a scheme that recovers back to plan. So say, for example, you're not achieving your activity, you're 10 surgeries behind, and you get back up to where you should be. You put an extra clinic on and your 10 surgeries go away. You're just back to where you should be. You've not gone above and beyond. So there's no improvement there. There's no efficiency. So I just thought we'd play a little game. Again, if you want to just put in the chat whether you think these are or are not efficiency schemes, so whether we could class them as cost improvement. So I have a vacant post in my budget, which I haven't filled for 3 years. I don't need it anymore and I can give up the funding. Do we think this is or isn't an efficiency? Okay, we've got a mix. Some people say yes, some people say no. Okay, so Bethany, your answer is perfect. It's not a saving because you didn't spend the money last year. It's been vacant for 3 years. So you've not spent that money for 3 years. So the first year that it was vacant, it would have been an efficiency, but it's not anymore because you didn't spend it last year. Nicola, you got your hand up.
Yeah, no, sorry. So I understand that within the last 3 years it isn't a saving, but if you're then officially giving up that budget, is that not then classed as a saving?
No, because you didn't spend it last year. The post was vacant last year, so there was you weren't paying a salary to somebody last year, so that the cost hasn't reduced in compared to the last financial year.
So you're only compared to the last financial year. You can't.
Yeah.
Fine. Okay.
Yeah, because it has to be an efficiency in this year. So in the first year that it was vacant, it would have been an efficiency because you'd have paid it in the last year and not paid the salary in this year.
Right.
But because it's been vacant for 3 years, you didn't pay it last year or the year before that or the year before that. So it's compared to the last financial year. David?
Hi, sorry, does that hold true if, where I am in pathology, the substantive post is vacant, but you are filling it through, say, bank or agency? So the post itself, funding is still vacant, but you're using it. If you're now getting rid of the post and not using bank, is that not technically a saving?
Yeah, because you've paid salary in the year or in the prior financial year. It's just if your post has been vacant for 3 years and you've given it up in plain terms, then it's not. But yeah, if you've been covering it with bank and agency staff and actually that post is no longer needed and you'll no longer be paying bank and agency, then yes, you're making a saving because you're giving up the budget and the cost is reduced.
Okay, thank you.
Okay. So the next one, a member of staff who has been with us many years is leaving and their replacement won't start for 4 months after the current post holder leaves. Therefore, there will be surplus budget for 4 months. Do we think this is or isn't an efficiency? Okay, lots of yeses. Sorry, I think is everybody on mute only because we've got a pinging. Yeah, so that is an efficiency, because last year the person has been with us many years, so we've paid their entire salary, and this year we're going to be paying it for only 8 out of 12 months. So there is a non-recurrent saving of 4 months' salary there. So it's non-recurrent because you're going to replace the person. So it's only a saving for those exact 4 months that you didn't pay the person. If the post is forever going away, so say for example like the last one, if you are in year 1 and last year you had somebody in post, that person retired and now you're getting rid of the post, that's a recurrent saving because you're never going to employ that person again. But because somebody's going to fill this post, it's only non-recurrent for 4 months, but it is a saving, non-recurrent. So the next one, elective surgery is below the planned target due to a vacancy, but a new consultant started and the activity is back up to plan. Do we think this is or isn't an efficiency? Okie doke, I think that's a full house. You are all correct. It's just a recovery to plan. So you're just back to where you should be, so no efficiency there. So yeah, that's perfect. Next one, paediatrics have been charged for a drug that actually is for dermatology. They've asked finance to move the cost of dermatology, and paediatric have moved 30 grand over to dermatology. Do we think this is a saving for paediatrics? Okie doke. Again, I think it's a full house. You're all correct. It's not a saving because it's worse than dermatology, so there's no improvement to the whole organisation bottom line. We've just moved it from one place to another. We've not saved the organisation any money. So before I move on to budget holder responsibilities, are there any other questions about efficiencies or anything like that? No? Okie doke. So as a budget holder, you will have or would have many different responsibilities, and I just thought I'd have a quick talk through these and where you can find them. So most organisations have standing financial instructions, or rules as we call them, and a scheme of delegation. So has anybody heard of either of these things? Or know where to find them in their organisation? Yeah, SFIs, fab. Anyone else heard of either of these? Okie doke. So key SFIs tend to be the same across most organisations. Every organisation has their own specific SFIs, but the conception tends to be about the same. So these are the ones from my organisation. So overspends need consent of the finance director or the chief finance officer via management escalation. Some organisations it might be the CEO or it might be somebody else, but you need to get approval to overspend. You mustn't exceed your budgeted allowance, so actually you shouldn't overspend. You shouldn't go over established, so cannot appoint staff above funded WT without approval from the appropriate level. Within my organisation, it's the Director of Workforce. So again, that could be different depending on your organisation. And the budget must be used for the purpose authorised at budget setting. So if you've got some leftover money in course fees, you can't go and be using it to spend it on drugs. It's for course fees only. So they're kind of the key things that tend to be transferable. It's more just the approvals that change depending on organisations. Any questions on the SFIs? No? So then we have the scheme of delegation. So this is basically saying this is how we make approvals, this is how payments get made, that kind of thing. So within my organisation, again, these key ones, you should involve procurement to ensure that we comply with tender legislation and getting best prices for goods and services, looking at waivers, those kind of things. So if ever we're looking to sign a contract, you do not ever sign on the dotted line, as we say, unless you've asked procurement first. You should keep within your budget. A lot of these cross over. You should ensure appropriate authorization to recruit above your establishment. Again, going back to not recruiting above the funded WTE. And you should only approve financial transactions up to your approved limit. So you should know what your approval limit is and you should never go above that. Most organisations have systems that do that for them. Anybody who uses Oracle, it's not actually possible to approve above your approval limit in Oracle. So a lot of financial systems do it for you, but if you were signing off ledger, for example, you should never sign above your approval limit. You can always speak to your finance department if you're unsure what your approval limit is, and they'll be able to tell you. Any questions on the scheme of delegation? No. Okie doke. So you've also got a number of further responsibilities. So you should check your budget statements monthly. It's really, really important that you're really on top of checking your budget statements. This is how we communicate with you, I suppose, in finance. And you should inform us as soon as possible for any material unplanned spend. So that machine in the corner is getting a bit rickety and it looks like it might be due to be on its last legs. Give us a shout, just warn us about it. The more we know, I think, oh, do you know what? I don't think it's gonna last another couple of months, and we're gonna have to replace it. It's gonna be an outset that we weren't expecting. Just let us know about it so we can forecast for it. You should investigate costs that you don't recognise. So, speak to your finance teams to find out where costs have come from if they're not what you were expecting. Check the staff that you're being charged for are correct and that their banding are right. So, making sure there's no errors within payroll and that all the pay is correct. And you should check that your non-pay charges are as you were expecting and that they're approved as well, so that there's nothing in there that you think, I'm not sure where that's come from or that's not for me. Again, going back to the the paediatrics and the dermatology, is it right to be in your specialty? Is it right to be in your area? Any questions on budget holder responsibilities as a whole? No. Okie doke. So I'm going to talk you through a budget statement. Now it is Oracle. So if anybody doesn't use Oracle, the actual screenshots themselves probably won't look familiar, but a budget statement is a budget statement. So the elements of the budget statement will still make sense. So this is a budget statement in Oracle for a specialty, an actual one from my ledger, from my trust, and this is what it looks like. So you can see at the top you have a pay, a non-pay, and an income section. So this here is your budget, your annual budget, and this service should make a £1.4 million surplus. So brackets can be quite confusing and different ledgers represent it different ways, but for us brackets is good. In relation to income, because that means we are getting income, and pay and non-pay are without brackets, they're positives. So before any indirect costs or overheads are added, this budget should make a £1.4 million surplus. That's because they're expected to generate income of 2.8 million. Their pay is only 1.3 and their non-pay is only 25 grand. So their income way exceeds what it costs to deliver their service at an absolute simple level. This is their outturn. So this service actually made a £1.8 million surplus. So as you can see up here, they've saved a lot on their non-pay, and they've generated more income than was expected. So actually they're in a position where they've made more money than expected. And compared to budget, their surplus deficit is a 306 grand surplus. So it should have been 1.4, it was actually 1.8 and it's 306 grand. And this is before your indirect and overheads. So this is your net position with an overall surplus of 306k. This is your pay section. So you have got funded WTEs, or some organisations call them FTEs, whole times people. Your funded is your approved establishment. So this service can have 24.75 whole times of staff across numerous bands. This is your contracted, so this is your staff in post at agreed contracted hours. So actually they've got some vacancies, as you can see. They've got a whole time at other medical grades. They've got some vacancies at nurse bands, a 0.6 admin and clerical vacancy. So actually their contracted whole times are only 20.63, which is less than expected. Their worked is their actual hours worked, including overtime. So you can see here that obviously due to the vacancies, it's 21.91. So it looks like some people are doing some overtime. And then your paid is your actual hours work, including your overtime and your enhancements. So things like bank holidays, insociable hours, those kind of things, which you can see again is more. For example, if 1 hour is worked at double time, then it's 2 hours worked. So then basically, has anybody heard of SLR, service line reporting? Has anybody been involved with that? Yeah. That's good. So SLR basically measures the profitability of a service. Not involved, but I've heard it mentioned, heard of it, but it makes no sense. Yeah, it can be quite complicated to understand, and it's not always reported very clear, depending on the kind of method of SLR that an organisation uses. But it basically measures the profitability of a service, and it looks at all the income that they generate, all the costs that it costs to deliver their service, and it reports it for each operational unit. It's got a lot of benefits. So it helps organisations identify priorities. So things like where do we need to invest money? Where do we need to develop a service? And actually you can benchmark. So you can look at your SLR and how much, say, it costs you to deliver gastro services, and you can look at an organisation near you and how much it costs them to deliver a gastro service, and you can see if you're like above or below your local organisations, or you can do it nationally. And you can look at identify drivers of deficit. So you're thinking, you know, you'll see on this example that a service can look really, really great in a budget statement, but when you look to add on indirect and overheads, actually, it's not a great service. So using this one as an example, this shows us how this is the exact same service we've just looked at. So it's 306k in surplus. That's fantastic. As a budget holder, if you see that on your budget statement, great. You're exactly where you want to be. You're generating more income than you need to, and you're spending a little bit more, but not anywhere near as much more as what you would expect. But then we need to add on SLR. So direct costs are the first thing we add on. So these are incurred directly by your patients, but they're not in your budget statement. So things like radiology, pathology tests, theatre and ward costs. Again, this may differ in your organisation depending on your budget structure. But at my organisation, they're not included. They're in a separate cost centre. So we have a service called radiology, and they cover their own spend. So we treat patients with radiology, but they're not in the budget statement of a service. We then have indirect costs that we have to add on. So these are associated with the patient, but they can't be attributed directly. So things like medical records, catering, portering, clinical safety, audit, training. We couldn't say how much we spend on audit per patient, and we can't get it to that level because it's not. We don't say, oh, we are auditing one patient, like we can say that MRI scan was for X patient. So it can't go down to that level of detail, but it's associated with treating a patient in general. So these are indirect costs. We then have overheads. So we need these to deliver a service. We need finance, we need estates, we need HR and payroll. But again, nowhere near getting that at a patient level. They're just things you need to run the business. And then you have capital charges. So these are like non-cash things. So things like depreciation on medical equipment, interest on loans, dividends, that kind of thing. But as you can see here, this makes a huge difference. So that budget statement that was actually up by 306 grand is actually a loss-making service by £764,000. So you're £1 million down. So actually, you know, it's a loss. This is a loss-making service. So as a budget holder, you looking at your 306,000, you might think that's really, really good, but SLR will identify if that's true, if you're a service in true surplus. So if you're a service that's overspent, if you're a service in deficit, once you add on all those things, you're even more in deficit. So SLR is really good at highlighting that, and you can speak to your finance teams about if you want to look more at your SLR and whether you're a service in deficit. And you know, hopefully you're not. Most of them are, depending on your service and how you deliver it. But obviously that's what you have your efficiencies for, to make improvements. Are there any questions on SLR? No? Okey-doke. So there are loads of tools available to help you manage your budget that you can use and ask for. The first one is budget holder training. So, you know, ask your finance teams about budget holder training. I've done a lot of work about virtual budget holder training that I know a lot of organisations are working on. So definitely ask about that. Systems training. So whatever systems you use, like say if you use Oracle at my organisation, we host Oracle training. Financial reporting. So your finance teams will make reporting available to you. Quite often it will go to like senior management or to budget holders. So if you're just someone who is on this course because you kind of want to get an intro to finance, you know, ask your managers, can you look at the financial reporting? And your biggest one is your finance teams. So we're here to help all the time. So come to us, ask us questions. Even if you think it's not relevant, 9 times out of 10, it normally will be. I know I had a budget holder come to me way back when I worked in surgery division, and she was like, I'm gonna have to buy a new fridge. She was like, I don't know if you need to know, but I need to buy it. I need to buy a patient fridge. And I was like, I 100% need to know. You know, she didn't think it was relevant, but it's 100% relevant. So you know, just drop us emails, get in contact, and use us, have meetings with us. We're here to help. So finally, just for sort of like the last section before I open up to any more questions, I just want to talk to you about how scary spreadsheets are actually really helpful. Does anybody want to own up to being scared of spreadsheets? They don't always look very nice, I'll admit it, but once you know how to work them, they can be really, really great. So I thought I'd just go through a few things that you can do to kind of make things more understandable. So they're really, really flexible. We've got some admittance. It's totally fine. The way data is interpreted is so individual by person, and some people are very visual, some people are very you know, need to see it in a certain way, like enjoy charts and that kind of thing. Some people like to read text. So that's what's really good about spreadsheets, is how flexible they are. You decide on the layout and the content. You know, you can manipulate the data to show it in multiple different ways to kind of go through what's understandable for you. So I just thought I'd talk about, I think it's 1 or 2 really good hacks that you could take away. These slides will be distributed so you can see how to do it. But a few things that I would ask of my budget holders, and these are the kind of things I taught them to do to kind of help with that. So does anybody know about conditional formatting? Has anybody used it before? Yeah, it's basically just a way to highlight anomalies. So it's a really quick and easy way to do a RAG rating. So this example here, I don't know what we're looking at. Let's call it number of patients treated. We've got January to December, the number of patients that we've treated, and these are our numbers. And the threshold is plus or minus 10%. So it's £200 is the 200 patients is the yearly average, and we want to know any of them that are plus or minus 10%. You can use conditional formatting to just answer the question for you. So you would need to go through each one of these numbers. 204 is 4 plus or minus 10%. No, okay, it's not that one. Whereas conditional formatting, you can set up a rule that does it for you. So you can say, please highlight any of these where it is plus or minus 10% of the yearly average of 200, and it will highlight them for you. So it's really, really good for, like I say, highlighting out the anomalies, picking out data, and a quick and easy way to do a RAG rating. So say, for example, we wanted to say, please highlight any months that are between 180 and 200 patients. You can get it to do that for you immediately rather than having to individually go and pick them all out. So it's really, really great for that. It's super easy to use, and when you click this button here in this blue bubble, it gives you lots of options of different rules you can put on, or you can create your own. So that's really good if you've got a big data set that you kind of just want to, you know, you don't want to be bogged down with looking at all the detail. You just want to see, I don't know, like I say, the ones that are plus or minus 10%, or ones that are way higher than average, or things like that. Then the next one is graphs. So they're a really good way of demonstrating trends. You just need to ensure that you understand the axes so you know what they're showing. So again, we've got the same set of data, and actually this is again patients' admittances. So you can see here on this line where your peak is and where your trough is. So it's, if you're a visual person, graphs are a great way to be able to see that. If that makes more sense to you than this. So these are just highlighted, but actually if you want to see it on an average, that's a great way to do it by using a graph. So that's another hack. And then the last one is pivot tables. So these are what I think scare people the most, because finance love a pivot table and they tend to be quite mammoth. And my pivot tables, I'll admit, are quite mammoth. But you can really drill down into each number to see where the individual lines are. And you can present mass data in a really concise way. And it groups data as well for a simpler overview. So, for example, here on the right, this is a whole set of data. So this is the vendor and how much money they owe. And you can see here that like vendor 3 has got lots of different lines. So you'd be going through with your calculator trying to add them up. But if you put it in a pivot table, it actually just gives you one line for vendor 3 with a total amount of outstanding debt. So it's much simpler to be able to see. And it's like I say, it just groups that data and presents mass data in a way, because nobody wants to be going through to kind of say, oh, well, that's vendor 3, the third line's vendor 3, the fourth line's vendor 3, oh, down here, this line's vendor 3. That's really, really difficult to see and to understand. But actually just popping it in a pivot table really simplifies it for you and groups it up. So they're probably the three main conditional formatting, graphs and pivot tables. They're really simple. You can speak to your finance teams. I'm sure they wouldn't mind just kind of showing you how to do them if you were unsure. 9 times out of 10, they'll probably put them in pivot tables for you. But if they don't, I would definitely recommend using them. So I think we finished a little bit early. So are there any generic questions, finance questions, budget questions, or anything at all anybody would like to ask? Obviously, the answers may be different depending on your organisation. But yeah, okay, I have a question about SLR. How does a trust decide how much of the overheads are allocated to each service? It depends, it changes. So estates, for example, is usually done based on like square footage. So yeah, it depends on each organisation, it changes. It could be dependent on their income. So if they generate 50% of the trust's income, they would have more overheads than a service that delivers 20% of the trust's income, for example. So yeah, it varies on different things. Sometimes it can vary on department, but they'll be able to tell you how they allocate overheads. Sometimes it can depend on expenditure, like I say, income, square footage. It varies. I hope that helps. What does AWL stand for in relation to pay? Couldn't tell you. It's not one I've heard of. That might be specific to your organisation. AL, we always say obviously is annual leave, but I don't know. Sorry. Oh, there we go. Affordable workforce limit. Not one I've heard of. Thank you, Ian. Is there a formula to work out the WT equivalent for part-time staff? Yeah, there is a spreadsheet that you can use it for. Hold on, I'm just going to pause these comments because I can't, I don't want to lose any. And then I can see your hand, Rachel, I won't forget. So usually a whole time is 1, and that's usually 37.5 hours. Obviously, nursing staff can vary and consultants work in PAs. But we have on our trust intranet, we have an Excel that does it for us. And also finance can do it for you. They can do costings. Say, for example, if you've got 20 hours, then you're working on X amount of whole times, or if your staff member works 2 days, usually we say it's 0.4, so we usually say 0.2 per day, but obviously it depends on the nature of the staff. What is the implication if a SIP is not met, with services being squeezed for so many years, opportunity to save are sparse? Yeah, so I appreciate that, it can be difficult. The implication is that the trust goes into deficit, so budgets, or the organisation, budgets are normally set based on achieving a SIP target. So if you say, for example, different organisations do it differently, but you've got a budget of £100,000 and you're expected to make a 2% saving, they'll give you the budget less the 2%. Because if you don't make that saving, you don't achieve budget, you overspend. So the financial position of the organisation is usually is usually based on achieving the SIP. So if you don't achieve it, you don't achieve financial position, and you go into deficit. So that's the implication of that. If you make a saving in one area of the budget, can you move it to another line, or is it a hard process? So I think, again, it depends on the SFIs. So it's usually quite common that budget is non-transferable. So if you make a saving, it usually has to be reflected as a saving, but you would need to speak to your finance teams because different organisations have different rules around it. In our organisation, if you make an efficiency, it's an efficiency. We can't use that money for something else. It depends on the nature of what that saving is. You can move budget across lines, that they're budget journals or environments, but that's, for example, I don't know, you've got a band 5 nurse and actually you don't need a band 5 anymore, you need a band 4, so you could ask to transfer that down. So yeah, Rachel, have you got your hand up?
Yeah, sorry, it's probably a bit of a stupid question, but sometimes when you place an order for something, say you order £900 worth of ALS manuals, why, when it comes into your budget, does it sometimes come in dribs and drabs? It comes in like 3 or 4 different chunks. Is that tax? Is that because sometimes I find that quite difficult to then unpick?
Yeah, do you use Oracle?
Yeah, we do. Yeah,
you do. Yeah, that makes sense. Okay, so yeah, the reason that happens is multiple things. So if you raise a purchase order in Oracle and you receipt it differently, so you receipt it separately, you'll get lines, because a receipt is effectively accrual. So you're saying, I've received these goods and I expect to be billed for them. So if you say you got the first 10 manuals and then you got the next 20 afterwards and you receipt it separately, you get separate lines. With the invoice in the budget, yeah, again, that depends. If the supplier sends separate invoices for those manuals, so say you order 10 about plastics, 10 about dermatology, and they send separate invoices, again, you'd get separate lines. And yes, sometimes you can get a tax kind of payback. So if the tax is recoverable, what happens is you get charged tax initially, and obviously your purchase order is raised net of VAT. So you would get your invoice and it would be charged to your budget, but then you may get a tax rebate in the next, a VAT rebate in the next month, because we've been able to recover the VAT, but that's only happened retrospectively. So they're usually the reasons why they come in separately, and totally no stupid questions. It's a very valid question. At the minute in my job, I manage AP and AR, so it's one we get very often, and it's very common in Oracle. It's tricky, and what you find as well is that you get a receipt and your receipt hits your budget. When your invoice hits, your receipt reverses out, so we don't charge you twice. So you end up with something about 20 lines for one payment, and it's very confusing and very hard to manage. I do appreciate that, but yeah, that's the reasons for it.
Okay, that's fine. I just wondered whether it was just me and my trust, but exactly
No,
what you say. You sometimes see kind of 20 lines for one purchase, and you think it just makes it so difficult to unpick if you've actually spent what you think you spent.
It's very difficult. And also if that invoice moves from one purchase order to another, you get ins and outs and credits and debits, and it becomes very confusing to see. But there are ways, if you speak to finance, to export Oracle and to export BI, and you can group them.
Okay, I mean, I export it into a spreadsheet often, and look, so can you group them in that way if you export it into Excel?
Using pivot tables, yeah. So you can, there's a section that gives you a PO number, and you can pivot by PO number, and you'd get just then one line that would summarize all of those transactions in and out, which should eventually just be your £900 spend.
Oh, amazing.
Yeah, I appreciate it's frustrating. It's not great.
That's really useful. Thank you so much.
No worries. How is a SIP target decided for a department? Again, varies by trust. We get an overall target, and we do it based on expenditure in my organisation, but you can ask your finance department, they'll be able to tell you straight away how they allocate SIP. What is SIP? SIP's cost improvement. I think the session's been recorded, so you can definitely catch up. Oh, sorry, Sarah's answered underneath. Yeah, cost improvement programme or cost improvement plan. We used to call it PET, so it used to be productivity and efficiency target. It's got all different names everywhere you go, but yeah, it's just efficiencies. Okie dokes, I think we've got just 2 minutes left. Are there any other questions? I always, oh, here we go. Soon after invoices a good service I receive is actually paid out of the budget. I sometimes struggle to correlate my actual monthly spend per subjective line with the requisitions I approved that month. So the invoices, it depends when your supplier sends your invoice. So if you order, we'll use journals for an example. Thank you, Rachel. If you order journals and you receipt them because they got delivered, if that supplier doesn't send their bills till the end of the month, then you won't pay for it until then. But when you receipt, you create an accrual in your budget to say that you're expecting to pay for something. So you get a charge to your budget as soon as you receipt an invoice, as soon as you receipt a purchase order. That's when you receive your charge. And then what happens is when your invoice comes in, we take away your receipt and you get charged your invoice. Hope that helps. But yeah, thank you all very much. I'll pop my email in the chat if there's any other questions, or I can just see, sorry, last one. Is there a risk in being too efficient? Were you expected to be even more efficient in subsequent years? It depends. It depends on your organisation's financial position. Obviously, we're always looking to improve services where we can. But if you achieve your target, you know, that's great. I appreciate sometimes, especially with COVID and stuff, it's not always been possible. But yeah, I don't know. That's one of those, isn't it? That I don't really know the answer to. But yeah, thank you all very much.
Thanks, Beth, and thanks everyone for joining. The session has been recorded, so we'll make that available after today on our YouTube channel, and we'll circulate a link. And also there are some slides that we will circulate from Beth's session as well following today. So thanks again, Beth. Always excellent as usual, and hope to see you again soon. Thanks all. Take care.